The Chinese solar industry is grabbing more global attention than ever before. After years of rapid growth, this massive sector, which rakes in hundreds of billions of dollars annually, now finds itself caught in a brutal price war that seems impossible to escape. As the largest solar market and manufacturer worldwide, China's production capacity represents over 80% of the global supply chain across nearly every segment. In 2023 alone, the total export value of Chinese solar products hit around $48 billion, with all 10 of the top companies in global module shipments being Chinese. Yet, beneath these impressive numbers lies a troubling reality. The industry is increasingly trapped in a cycle of overcapacity, supply-demand imbalances, and fierce competition. According to the China Photovoltaic Industry Association, solar product production surged over 32% year-on-year in the first half of 2024. However, due to intense competition, prices have plummeted dramatically. Silicon materials and wafers alone have seen price drops exceeding 40%. This irrational pricing means many companies are struggling, with the bizarre situation where selling more actually leads to greater losses. With this supply-demand mismatch, operational rates are continuously declining, especially for polysilicon and cell manufacturers, whose utilization rates are now below 60%. Even as global solar installations keep rising, companies are feeling the pinch, and market competition has reached an intense level. To tackle these challenges, on October 12th, leaders from 7 major Chinese solar companies came together on a financial program broadcast by China Central Television. They discussed the industry's current state and future direction, calling for reduced internal competition, greater collaboration, and stronger self-discipline within the industry. Despite the calls from Liu Hanyuan of Tongwei Group and Zheng Baoshan of Lungi Green Energy for cooperation and differentiated competition to drive growth, there's skepticism about whether these ideas can be realized. The current market landscape is vastly different from the past, and the level of competition has reached unprecedented heights, making true collaboration and self-regulation quite challenging. Just 2 days later, on October 14th, the China Photovoltaic Industry Association held a closed-door meeting in Shanghai, focused on anti-internal competition. The goal was to systematically address supply-demand imbalances and tackle excess capacity. Participants discussed a self-regulation charter aimed at combating this internal competition and engaged in meaningful conversations about steering the industry towards healthy development. The meeting stressed the importance of streamlining exit channels for outdated and inefficient capacity to ensure fair competition in the solar market. However, the real impact of these meetings will take time to assess. While attendees reached a consensus on enhancing self-discipline and promoting innovation and collaboration, it remains unclear whether effective market rules and cooperative mechanisms can be established in the near future. The ingrained competitive habits among companies are still present, and achieving healthy development will require overcoming various internal and external hurdles. The challenges facing China's solar industry are complex. On one side, excessive competition and low-price strategies have severely squeezed profit margins. On the other, the industry is plagued by severe product homogenization and a lack of innovation, which hampers companies from building sustainable competitive advantages. Additionally, fluctuations in domestic and international market conditions and economic cycles present significant challenges. Analysts caution that if the Chinese solar industry cannot break free from this cycle of low-price competition, it could lead to a sluggish market, further losses, and even bankruptcies for many firms, threatening the industry's long-term viability. The anti-internal competition initiative is still in its infancy, and whether it can successfully guide the industry toward healthier growth remains uncertain. The future of major companies depends on their ability to move past this entrenched low-price competition and achieve sustainable development.